All right, so the collapse of Silicone Valley Bank has prompted a lot of questions, concerns, uncertainty in today's market. And it's understandably so, because as of right now, that was the second largest bank failure in US history. Now, we'll let you know that the majority of the clients that Silicone Valley Bank had as clients were large institutional clients, hundreds and hundreds of millions of dollars in their accounts. So they didn't really cater to the mom and pop clients. However, the collapse did have an impact on mortgage rates, because before the collapse happened, the average 30-year fixed mortgage was a little bit over 7%. And then as soon as the collapse happened, mortgage rates started coming down, and they dropped almost half a point down to 6.5%. And they're kind of still just kind of moving around a little bit, kind of in that range. But that's what happened. And the reason that happened is because anytime there's uncertainty or fear in the marketplace, that's good for mortgage rates. That's good for the bond market, because money leaves the stock market and goes into the bond market. And when more and more money goes into the bond market, that means prices go up, interest rates come down, they have an inverse reaction. So if less and less money goes into the bond market, interest rates go up. And the bond market and the 30-year fixed rate mortgage are very closely tied at the hip. So that's kind of what happened. That's the reason why interest rates have dropped, because when there's uncertainty in the marketplace, like a recession, a pandemic, any sort of global crisis, like a war, with Ukraine and Russia, stuff like that, that actually caused rates to drop down a little bit when it first started. Anything that's bad for the economy or news, unfortunately, helps mortgage rates. So it's going to be interesting to see what the Fed does in terms of the Fed rate hike here in a day or two, because if there's still a lot of fear in the market, a lot of negative news in the market, they might not, there's rumor that the Fed might not increase the Fed funds rate at all. Or if they do, maybe 0.25% to not scare the market anymore. So we're going to see what happens, but just know that I am seeing a lot of activity on the buyer side. Not a lot of people selling, however. So the homes that are priced correctly are going quickly, and they're going for multiple offers. A lot of our clients, they're in that price range where they don't want to be overextend themselves, and the price range in the $350,000 to $450,000, $500,000 range, those houses are selling very quickly, and a lot of our clients are in multiple offer situations. But the good news is we're helping a lot of our clients win those offers with our strategies that we have in place. So if you need any help, we do all the shopping for you. If you need some strategies to help your offer get accepted, we are the right team for you. My team and I would love to help you. And if you have any questions, I look forward to talking to you soon. Have a great rest of your week.